I want to look at a standard setup that I use for TradingView. Useful piece of software that I use for TradingView. Useful piece of software. So let's just go into the charts. I'm already connected. I don't trade in this tool, but I do use it for mapping things out. Let's go and look at AI. In fact, I want to create a new one. I need a blank. Already got that. So let's do it this way. Let's, how do I create a new one? Mistake, here we go. I want to create a new layout. I want to show you how to create these things. So test. Let's put Apple up here. So I have a list of things I like to plop in here. Let's make this, get rid of that one there. Make this a little smaller. No, don't do that. I'm going to look at my list at the same time. There's various tools I've used over time. Some of them I don't use anymore or as much. Let's save this so we can see it. I'm starting with a blank. Find a stock. Let's try Apple. We've already got Apple. There's Apple, up and down. This is over a long period of time. We can expand this with the plus sign or use your fingers on the screen, or you can make it over a longer period of time, 2024. Go back to here, eventually we get to 2023. Let's go back to the minus sign over time. I like to use candlestick charts, but at this type of magnification, they don't really help, so you just use a line chart there. I don't generally tend to trade over periods that are that long. That's investment. Trading is not investing, trading is short term. Well, put it this way, I don't trade anymore all that much. Used to. It's very difficult. Investing is, I'd say investing is easier, but I think it actually makes more money in the long term. So, now there's a gap there. It's an interesting one. So what do we got here? We've got a couple of months. Let's make this a little bigger. So let's select Apple. We've got Apple right there. And we're going to add something called Bollinger Bands. Bollinger Bands, I don't need a strategy, I just want Bollinger Bands. Bollinger Bands shows me where we expect it to go to the maximum, where we expect it to go to the minimum. Right, so that means when the stock gets over this top line, it generally tends to go underneath it and go down. When it gets below this bottom line, it tends to go up. So if we change this to a line chart, it might make it a little more obvious. See? It goes below the lower Bollinger Band, then it goes up. It's close to it, it's not gone over it, then it goes down, then it goes up, then it goes down. Understand? So what these are is a calculation of variance. I think it's set to 2 by default. It means that if it gets outside a variance of +2, it tends to go down. And if it gets outside of a variance of -2, it tends to go up. This is the price of the stock. I'm not sure what that is. It's basically an SMA. It's a moving average window, and the Bollinger Bands are built around that. I generally don't use this anymore. So I do, but it clutters up the screen. Let's get rid of these two. Get rid of that, get rid of that. So we've got the line again. And as I said, I prefer to use candlesticks that are not hollow. Plenty patterns in candlesticks someday. So now let's go and add two that I use quite a lot. This is exponential moving average. It's basically a window. And I generally use, let's add another one. I think I've got to go back out again. I added 2. The default is 9. That's not really useful to me. What do I do with this? I go into here. No, hang on a second. Oops. Settings. Nope, that makes it invisible. It's the settings. So, 50-day moving average. Oops. And I like that one. That's the good one. I like it blue. And I like to make the line thicker so I can see it. The next one I'll add is, and click on this thing, if I can see it, there it is, settings. This one is going to be red. There's red there. I am also going to make it thicker. I'm going to change this to a 200-day moving average. I'd like the short-term average to be above the long-term average. Why? Because it means that investors feel better about the stock market. When short-term, it makes them want to buy today, not buy next week and sell today. So again, here's crossing underneath, crossing above. Death cross, golden cross. Very general. So what else do I add in there? I like to use candlestick charts. There's all sorts of patterns you can spot in there. I do not see anything there at this point. I like to make, hang on a second, something disappeared there. No, it didn't. Drawing lines can be interesting. For instance, doing this, you're looking for patterns and candlesticks. Put that up there. I take a copy of this. So you, where's the copy? Well, Control C is one way to do it. And then Control V. You get another line and you try to match it up with a pattern down there, kind of. So what that would tell you is that the stock will start going up again when it gets down to there. When it gets up to there, it'll go down, up to there, go down, right? It's kind of a pattern, although you may want to have multiple patterns in here, but it can make it. So now we take one of these lines here, put this in here, right? That's guesswork. That's very difficult to do. So what's the next thing I got here? Next to candlesticks, I like to add in a thing called relative strength indicator, and there's multiples of them. I'm not sure which one I normally use. Let's try this one. Yeah, that's a simple one. What that tells you is when the stock is very strong and it goes over that top line, you should probably sell it. When the stock is very weak, you should probably buy it down there. Right? That means it's overbought. It's too much investment. That means it's oversold down here. Right? Oversold goes up a little bit. That's not really overbought. That's overbought there. That's gone down. Now let's add another thing called a MACD, moving average convergence divergence. What this tells me, the green, it means it's getting faster and faster momentum going upward, and the momentum going upward is slowing down. These bars, right, the histogram. Same applies on the other side. This means that it's getting more and more negative, and this means it's getting less negative. It crosses the line between the green and the red. That means green is going up, it's healthy, and red is going down. Really, the healthy point is where you need to sell it, up there. This is where you need to buy it. So look at the match here. Buy it here, goes up. Sell it here, goes down. See? You sell there, you buy there. You don't buy there and sell there. That's lose money. Yeah, I mean, somewhere here, like you might buy somewhere here, buy somewhere here, buy this, you'd sell, this, you'd sell. That's trading. With investing, you tend to ride these waves, or you make them over longer periods. So let's do something else. I find that plus sign is hard to find sometimes. MACD is not quite as useful there, but up here, for instance, see there, the relative strength indicator is very positive. Sell. See the market goes down, or the price of the stock goes down until you get to about there. And then it seems to start going up again, but the stock price is going down. It doesn't always match. So the other one I like to use, there's a stochastic oscillator, which tells you more or less the same thing as the RSI and the MACD. I've got to find it. Trying to find a particular indicator that I used quite a lot in the past. I don't know exactly what the name is, but let's do this one. No, that one I don't like either. That one I don't like either. Nor that one. Yeah, it's that one. See, that one I like. Stochastic Momentum Index, SMI. I'm going to very carefully try and delete the other ones. There's too much information here. One of the dangers with this stuff is using too many of these things. I am doing that already right now. See, same pattern. RSI over, I think it's 90, I'm not sure, 80 or 90. That means sell it. That means it's overbought. That these green things mean buy it. Green good, red bad, right? Same thing here, except this is the opposite way around. Green is actually good, it's making money, but it means you should sell it. There's one more thing, built by somebody called Larry Williams, and it's called a Williams percentage indicator, and it usually matches other things, but not always. And a lot of people rave about this guy. Sometimes you'll find this thing is up and everything else is down, and vice versa. You want to be very careful when you see something like that. So a lot of the advice online is to use lots of different tools and match them up to make sure you're sure. A lot of other advice is just use one thing because it's too complicated. It all tells you the same things. You're looking for trends. There's a trend upwards. That's where you should be buying. You've got to try to spot this, which is impossible. When the trend is negative, sell it. Trend is positive, buy it. Trend is negative, 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 positive. Might be time to buy Apple now. According to this guy, it's not actually gone to the maximum there. It's gone over and it's coming down again. See, the positive momentum is coming down on the MACD. That means it's increasing at a slower pace. This means it's not overbought, but it's certainly not oversold.